Good morning. Welcome to Twin Cities Startup Week and Bookkeeping Basics. I am Rebecca Foley with Phoenix Growth Systems. We got a little bit of, people might still kind of wander in, but we will get started anyway. So a little bit about me and a little bit about Phoenix Growth Systems. Let me get to my window quick. Here we go. So I am Rebecca Foley with Phoenix Growth Systems. I have been a bookkeeper for seemingly forever. My dad is an accountant, and he trained me from a young age. I started my first bookkeeping business in 2011, and over time ended up closing some, starting new ones. This is the third iteration of my own bookkeeping firm, and I started Phoenix Growth Systems in 2019. We're a team of bookkeepers who work with entrepreneurs to help them grow their businesses through using bookkeeping. And our core value is creating a safe space for everyone to feel included and valued. We love working with folks from historically excluded communities, and we work with startup founders, social entrepreneurs, solo entrepreneurs, lots of different industries and types of folks that we work with. Getting into things, I'm sorry that you're here, honestly. I mean, I'm very thankful that you're here, but I'm sorry if you find bookkeeping boring. I will try my best not to make it boring. But the question, I get asked a lot of times is, what is bookkeeping? For me, that is an odd question to have because I feel like it's baked into my DNA with my dad being an accountant. And one of the first things that I started doing as soon as I was old enough to, when I was working for him, was bookkeeping. In fact, my very first in-house client was my grandparents' business. So it's just, for me, it's like every pore of my being is bookkeeping. But it is, so when people don't know, it just confuses me. But it's the foundation of healthy organizations. It provides tools for growth and expansion. And it is an organized process to track income and expenses. And it empowers you to create an organized picture of the health of your organization, plan for growth, identify problem areas, and create plans to correct them. Apply for financing, which I'm sure a lot of folks are familiar with this week with Twin Cities Startup Week, and provides info for your accountant for tax filings. That's a big one. Everyone thinks that's what bookkeeping is for. We can go into the actual process. The actual process involved in organizing your transactions includes income and expenses. The process includes your chart of accounts, your accounts receivable, and your accounts payable. The chart of accounts is the map for organizing your transactions using accounts. It's used to create your reports, such as your profit and loss and your balance sheet. And we will go right to a sample of a chart of accounts. So this here is a sample, and it's really small. I'm going to try to make it bigger. Sorry, 1 second here. Okay, there we go. I think it might have accidentally. Okay, everyone's still seeing it. Good. I'm having a little bit of. I haven't shared my screens through Hopin before, but we'll get there. All right, so chart of accounts. We are looking at Craig's Design and Landscaping Services. Just don't worry, it is completely a sample. None of this is real, but we're going to pretend that Craig is, because we will. Another quick disclaimer, there are things that I don't like about the way the quasi bookkeeping was done on this, and I'm sure I'll talk about it, but that's fine. Okay, so we're looking at this sample of the chart of accounts, and we've got the bank account, the bank accounts. Everything here is organized as you would see it on the profit and loss and the balance sheet. So you're going to see all of the assets in one section, all of the liabilities in another, equity, and then you're going to see it's a ton of income accounts, by the way, which is silly. Your cost of goods sold, and then the expenses. And I think I was planning on going into more detail about that. Other than just a quick note, fixed assets, mowers, other equipment like that, because, and then obviously here's credit cards, other liabilities. They've got loans. You see those here. That would show up on your balance sheet. You're taking money out of the business or you're putting money into the business, you would see that here. If you've got a venture capitalist who is purchasing equity from you, from your business, that would also show up here. And then here's all of the income accounts. Yeah, so we can move on. We'll get into a little more detail about all those things in just a bit here. Just loading, we'll get there. Okay, cool. All right, so we talked about that, and we'll go on to accounts receivable. It is all of your income-related activities. It's the process of recording the amount owed to you, so you're invoicing, and it's the process of recording the amount your customers have paid you. Next screen would be accounts payable, and that's just the flip side. It is the expense-related activities. So the process of recording the amount of money you owe to your vendors, your bills, or the process of recording payments to vendors, including outgoing transactions like that you maybe just use with your check card or something like that. Quick note about bookkeeping software before we get even further into things. So our team uses QuickBooks Online. I use primarily QuickBooks Online, but I'm starting to use Xero. There's a lot of other software out there, and then you want to consider these items when you're looking for software. So you want to look for something that connects your online bank account to your software. It's going to import your transactions automatically from your bank account into your software. They use AI to do this. They will assign, usually they'll look at it and the software will automatically assign different accounts to your transactions based on your past history. And also in QuickBooks case, they use other clients' data too. So if everyone goes to, let's say, Speedway and buys gas, well then that's how they're going to suggest that you record it. It's a helpful function, but it needs to be monitored because it's AI and it doesn't have critical thinking. So it needs someone that has critical thinking skills to do it for it. You want your software to have a robust reconciliation process built into the software. We'll get into that a little bit towards the end, but that's kind of your last step in bookkeeping, and it's incredibly, incredibly important. You want your software to generate reports. You want it to generate your profit and loss, your balance sheets. Those are the essential ones. But you also want to be able to pull like basically every report imaginable. If you can think about it, you should be able to pull it. Payroll reports, client customer lists, AR aging, AP aging, expenses by vendor summary, and income by client summary. Those are kind of just a few that a lot of people use. And then you want to be able to share access easily between users. If you've got a couple people working in the file, a couple of your employees, and then also your bookkeeper and your accountant, those are usually the people that you want in your file. And then you want them to be able to collaborate easily together. So cloud-based accounting software is really good for that. Oh, okay, so now we're moving into reports, and we've got our key reports, our profit and loss, our balance sheet, our AR aging summary, and our AP aging summary. We will look at a little bit of an in-depth look at the profit and loss, and then we'll glance over the other three. So the profit and loss is a formula. Before I say that though, it's the report that I refer to the most. A lot of folks rely heavily on the profit and loss, as they should. It's a good picture of the health and activity of your business. So the basic formula is your sales, your total income, and your cost of goods sold. So those are your expenses to conduct business. We'll go kind of backtrack and talk about Craig a little bit here. They do landscaping, and so for him, his cost of goods sold would be things like fertilizer or sprinkler heads or things, things that would go into an irrigation system. So when you're purchasing something to sell, that would go into your cost of goods sold. You subtract that from your sales and you get your gross income. And from there, you subtract your expenses and you get your, what we often call the bottom line, the net income. And that's the amount that a lot of folks look at. You want to know, okay, how much am I actually making here? So, how much am I going to walk away with kind of at the end of the year? And your accountant definitely wants to know that too. So that's kind of what we talk about when we say net income or the bottom line. So we're going to, before we start talking about using the P&L, let's look at a P&L. We've got this one here. It needs to be a little bit bigger, I think. Let me double check. Can y'all see that okay? We'll go with it. Okay, so here's the P&L. It's also really fictional, so don't worry. And here's where I was talking about all of those income accounts. This do not all of these like Craig does, but then we see the total labor here. And Craig, also another reason why I don't like his bookkeeping, has all of these expenses here when they're job related and they should be cost of goods sold. So they should be subtracted from this. For our purposes, it's kind of annoying because you guys can't fully see the formula if the cost of goods sold aren't there. But that would be subtracted here, and then this number would be this minus this. So then we look down here and we can see all of his other expenses. And again, he's having a really weird year. This was pulled from 2020, so it could be, or he does really bad bookkeeping and needs to get some help. But yeah, so these would be the expenses, and we would see that reflected here, and this number subtracted from this number, which is the gross profit, is the net operating income. So generally, that would be it. But we've got this amount here too, which is another indication that these books need to be fixed, because you never want to leave anything in miscellaneous. You always want to make sure that your expenses are coded correctly. Sometimes your income doesn't get coded correctly either. And usually these are those accounts that you will see that in. So this here, this gets subtracted from this, and then this is what you actually get. So he's in the negative. We'll go back to the presentation. And you can see the information. You can use this information for growth and to identify and correct problem areas. We're going to talk about growth first. So if we were looking at like Craig's profit and loss, and his net income was reflecting income, we could use that to plan for growth. So we would be talking about increasing revenue streams, and also we would want to utilize this to reduce tax liability at the end of the year. And so one of the ways that we can do that is we can look at purchasing or financing equipment or inventory to help increase future sales. So we could look at, we're in 2021, we would look at, okay, if we're Craig and he's listed as being in Arizona, but if he was here and he's doing snow removal services, we could look at purchasing a Bobcat, and whether he uses funds that he has now or he finances it, that will all, that would go on his balance sheet if he finances it, actually if he purchases it too, and it would reduce his tax liability, and it would invest in the business for future growth. You can expand your physical space if you own a brick and mortar. Surprisingly, I have a client that last year they were a restaurant, and they had been planning before the pandemic to expand their physical space, and they were actually able to do it even during the pandemic, which is just amazing to me. But this would be one example of, oh, we've got all this extra revenue. What can we do with it? Well, if we grow our space, we can grow our finances. We can grow our sales. So you can also increase your advertising budget. You can hire additional employees. One of the things that I also would like to mention with this, considering our current climate and how some small business owners view labor, you can not only hire additional employees, but make sure that you're paying your employees a livable wage. So maybe increase your payroll costs by paying your employees better. You can also increase the amount you pay yourself, either via an owner's draw or payroll, depending on your structure. And a quick note about that, though, too, is that's not necessarily going to reduce your tax liability. But, at least you're getting revenue from your business. So that's good, too. Okay, if we are like Craig and we're operating at a loss or in the red, we can use the P&L to identify problem areas. So we can increase sales by raising prices. Most service-based entrepreneurs chronically undercharge. And I say that fully knowing that this applies to myself. That's been a huge journey for me, is learning the value of my services and making sure that I charge accordingly. You can also reduce your expenses. So you can use the profit and loss to identify areas where maybe you are spending more than you should be, or spending areas where you can reduce your spending. So let's say you go out to, for meals and entertainment a lot, you can say, oh, well, maybe we shouldn't have meals out. Although, I mean, who's really eating out during a pandemic? But, and then you can also negotiate with vendors. So you can change the timing of your expenses. This is really common with insurance companies. They will give you discounts if you pay quarterly or annually versus monthly. So you can look at that and see if you could do a quarterly payment versus like a monthly payment. You can also look at trade agreements. So you can see if some of your vendors are willing to trade services or goods for services, things like that. Might include a little bit of sweat equity, but it might reduce your expenses for the year. I would say that's not a good long-term solution. And you can also look and see if your vendors are willing to reduce your costs. Maybe they would give you some type of discount if you purchase wholesale, or not wholesale, but like in larger quantities in bulk. Or if you can maybe even check and see if a different vendor has items at cheaper costs than what your current vendors have. Before we get into some of the next slide is common bookkeeping mistakes. But before we get into that, we have to look at the balance sheet and the AR aging summary and AP aging summary. So this is a balance sheet for Craig. And this kind of ties into, you'll see this ties into a lot of what we've already been talking about with the chart of accounts, kind of with the P&L. We're looking here, and it's broken up by assets, liabilities, and equity. Yeah. And so we'll look here and see that there is his checking account, and this would be his undeposited funds. So this is like any checks he's collected that he hasn't put into the bank or hasn't gotten recorded as been put into the bank. Other current assets, that's like his equipment, things like that. This is what he owes on his credit cards. For some really strange reason, those loans do not show up on this balance sheet. I do not know why, but they should be here. And you'll see here, he's in Arizona. This is where his sales tax is. So any sales tax owed to the state would also be here. And then again, the equity. So we're looking at equity that's been put into the business and maybe taken out. Retained earnings would be from prior years. And then this number should always balance with this number, just so you know. I'm trying to regain my train of thought. I'm really sorry if it's kind of weird. So we were talking, I was kind of blabbering on about AP. It's the same thing as, aging, which is, kind of funny that I'm having issues because that's another form of aging, but we'll leave it at that. So AP aging is very similar to AR aging. It's just a look at a very quick look at what you have that is past due. So what you owe to your vendors. It's very much, again, AR aging and AR and AP are very much like two sides of the same coin in a lot of ways. I mean, AR is your income and AP is your expenses. So it's just basically the same concept. The next slides, a few slides on my talk, which I don't have up anymore because my computer was being weird, but they were talking about common mistakes that I see in bookkeeping. And a lot of them involve, like initially the first one was very cliche, and I'm sorry to be a cliche bookkeeper here, but it's a cliche because it's true. Anytime you mix your personal and your business finances together, it creates a huge headache for everyone involved. That is why we say don't have your personal finances and your business finances in the same place. You want to have one checking account, or however many you need for your business, but you want that to only be for business transactions. If you are a sole proprietorship or an LLC, when you take money out of your business account, that would just be recorded as a draw. And so it would go in that equity space that we talked about earlier. And then let's see here. The next one was about cash. Cash is my least favorite thing in the whole world because you cannot track it. It is so hard. So normally I would say you don't want to have your receipts. You obviously want to hold on to them for the IRS because they like those things. Although they are getting a lot more relaxed about it. And if you have if you have record of an electronic transaction, basically like your bank statement, things like that, they are starting to use that as proof of a transaction. But you want to have, if you're using cash, you absolutely must have receipts. I guess I'm being another cliche here, but it's really important because that is the only way you can track your transactions. So if you've got people that are accepting cash from their customers, or if they're paying for equipment, things like that with cash, we need to have a record of it so that we can put it into the books correctly, so that if the IRS does the dreaded audit, that they can look at it and say, yes, you actually did spend this. Here, we can see that. So that's a major component of it. The other things that I've been seeing or the other things that I had on my next slide were more not as cliche, but they're things that I'm seeing more and more frequently now. And I think are probably, if they aren't already, a bigger problem than those previous items. I think they will be, they'll get to that point. I see a lot of folks who use the online bank feed and they don't understand how it works. So again, I mentioned earlier, you want to keep in mind that it is like it's AI, and it's imperfect AI. So it's going to pull those transactions from your online bank feed and it's going to put it into a holding account. A lot of folks don't realize that doesn't go directly into your bank register. You have to go in and you have to assign it correctly and accept it into your bank register. You can set up rules, especially in QuickBooks. You can set up rules that will do it automatically, but I highly recommend that you do not do that, because if you do, you will get lazy and you won't review those transactions and make sure that they're getting entered correctly. And then you're going to have a headache on your hands and you'll have to figure out what went wrong. Trust me, you don't want to do that. That's not fun. So after that, that's like the big one. Quick side note here too. I had a client who always referred to that holding account from the online bank feed as transaction purgatory. And so then once you accepted it, it went into, I guess, transaction heaven. I don't know, transactions go to QuickBooks to die, apparently. And so we can move on from there, but that's a major one. And then the second one, or the last one I see is bank reconciliation is a huge issue. Folks don't understand how to reconcile their books. And a lot of times, this is where I start to feel old. I have told tutoring clients, oh, well, it's like balancing your checkbook, your personal funds. It's just like that. People don't balance their checkbooks anymore. So that's a really difficult analogy to use. But what we do with reconciling is we compare your transactions on your statement and your balances on your statement to what we've entered into QuickBooks. It's a way of checking our work. It should be done on a monthly basis. And it goes back to like elementary school when your math teacher was telling you, hey, show your work, check your work, things like that. That's really what the whole purpose of that is. And I think that is everything that I had. I can open it up for questions. I believe I can give other folks opportunity to chime in too, if you want to, do it via chat, or if you want to come in on video, you can do that too. It's kind of up to you guys, but that's everything. Anybody have any questions? Ooh, Michael, that is a great question. Any tips for reconciling multiple payment sources? For example, PayPal, credit cards, ACH, and other things. So what I would do with that is especially like for PayPal. First of all, PayPal is a bookkeeper's nightmare. It is getting better, but I still hate it. And what I do with PayPal is I treat it like a bank account. So I create a bank account for PayPal, and anything that goes from like your checking account into PayPal, I record that as a transfer, and anything that would go from PayPal to checking, same thing. I record that as a transfer, and then I reconcile that in a separate account. Credit cards, I don't know if you're talking about credit card payments, like if you're looking at like a credit card vendor where kind of like Square, something like that, or if you were talking more about using your own business credit card. And with using a business credit card, a credit card for outgoing transactions, you can set that up as a credit card, and it will be under your liabilities in your bookkeeping software, and generally it is listed as a credit card. If you're looking at credit card payments, a lot of times it's maybe not. Okay, yeah, so I covered the payable part. Income, a lot of times it kind of depends on how you're handling it. Sometimes I would just enter that as income and record it against an income account, or I would create a clearing account. Can you do a batch transfer of funds to cover a bunch of small Venmo? Oh, Venmo. Actually, I don't know if she's still here, but I think Lolly, one of my teammates, is in here too, and she loves Venmo. Lolly. Venmo is difficult because Venmo, this is a really, really, really good question. Because Venmo and Cash App, and well, if I'm missing any, you can throw it in here too. We have a really difficult time with those because a lot of times if we're going to reconcile them, they're not easy to reconcile. So sometimes we really recommend you don't use them for outgoing purchases because, again, you can't reconcile them. They don't provide a lot of the information that we need, and it's just because that's the issue, is when we go into the software for like Venmo or Cash App, things like that, and we look for a history to reconcile, it's really hard to get the information we need to do that. That's why we recommend you don't use it for outgoing. But for incoming, we would probably just do like a batch transaction. We've done that for some of our clients. If you're looking for a payment service, something that can process your payments, other than like PayPal, Venmo, Cash App, things like that, I would definitely recommend Square. I believe is one of the ones that our clients use Square a lot, and we really like it. It's easy, you know, it has easy reporting. It's very easy to put into our software. Wally, can we talk about the importance of entering and matching AR customer? And maybe we'll go into that so much, but this is a good point. It goes back to the online bank feed and issues that we've seen with it. One of the problems that we see a lot as well is if you are recording payments or that you've made, that you've received, or not that you've made, I'm sorry, that you've received, we will see that a lot of like duplicate payments. A lot of times people will record a payment that they've received, and then they go into the online bank feed and they don't know you're supposed to match those two items. So they'll record it again, and then we get a duplicate. And then the same thing happens, you know, on the flip side with payments that people make. They will record it in QuickBooks, and then they'll go in and enter it through the online bank feed instead of matching it. And so we see duplicates. Michael is using FreshBooks. I don't know about FreshBooks enough one way or another. I do know a couple years ago they tried to get me, they were contacting me, you know, like crazy to try to get me certified with them. At the time, I wasn't really interested in branching out from QuickBooks, and I was really busy. Again, kind of going back to my software stuff, I would really recommend you make sure that they can reconcile. I don't know enough about FreshBooks to know if they can or not, but that is a key feature. Oh, typical fees for payment processing, they all kind of vary. A lot of them are usually between like 2.3 and 3.5. That's kind of the general rule of thumb. And if you can, there's probably variations to like different rules for this and everything, but generally you can charge that your customers for that. I've found that charging a percentage for processing fees doesn't really help me because oh, I missed another question too. I'll get back to that in a second. I found that doesn't really help me because it kind of, like for me, receiving those ACH payments or credit card payments is convenient for me as well, and it helps me run my business and have cash flow. So I don't really feel like it's appropriate for me to ask them to pay for that. But a follow-up to your question was FreshBooks has a service to handle multiple payments, including ACH. I think it's fine as long as you have a record of it. Like if they're recording that it's just one payment and that's all the information you get, how are you going to determine where that payment where that payment should be applied, or all of those multiple payments? And it depends if you have, if you're working on a cash basis or an accrual basis. A cash basis would be, if you are a restaurant and you are just collecting money directly through that, and then that would be a cash basis. Or, you're like me and you invoice your clients and they pay on an invoice. Those are kind of two different things, and that might have been a tangent. I'm sorry. I don't understand your question, I think, Michael. The one about ERP software, like SAP, having ACH capability. Oh, okay. Maybe was not a question. Oh, Amy, hello. Oh, also, that is a great question from Wally. Can we briefly go over the importance of a tax professional and a bookkeeper on your team instead of only a bookkeeper? Okay, so Lolly, thank you very much. This is a great question because Lolly, Luan, our other teammate, and I are bookkeepers, not accountants. And the difference generally is if you are a bookkeeper, you may not have as many certifications. You won't probably be a CPA, although there are some. And you don't generally do taxes, especially individual tax returns or business tax returns. We do some tax-related stuff, like we handle some payroll, although we really try not to do a lot of payroll. And we do sales tax, Minnesota sales tax. So that's one major difference, is just the certifications involved. But I like to describe it as the difference between a lawyer. When you think of like a lawyer and a paralegal, it's a very similar relationship. So your accountant would be like the lawyer and we would be like the paralegal. We prepare things for the accountant. That's not what we do, as we talked about, but in that relationship, that's kind of our role. You want to make sure you have a CPA who is you don't want a tax preparer or someone that is a registered agent. They're those folks, I mean, I'm sure there's folks out there who are tax preparers and registered agents who do a good job. They are primarily for individual tax returns and may not have a lot of knowledge about filing business taxes. Also, they are less hands-on. So if you get a good CPA, they're going to coordinate with your bookkeeper and they're going to look at your books. And they're going to communicate. Communication is a big thing, whoever you work with, whether it's your bookkeeper, you should have a whole team, honestly, but your bookkeeper, your accountant, your lawyer, all the professionals that you hire should be very communicative with you. And so that's one thing you want to look. You want to look for someone who's a CPA. You want to look for someone who knows new accounting software that utilizes cloud-based software. We used to call the ones that didn't kind of the dinosaur accountants. And there's still some out there, surprisingly, that aren't comfortable with QuickBooks Online, or I'm really having a hard time finding accountants that are comfortable with using Xero. So that's another thing you want to make sure that they are. Nothing against dinosaurs. In fact, we love dinosaurs. But you want to make sure that they are comfortable using your software is another thing. Lolly, if I'm missing anything about the relationship between a bookkeeper and an accountant, or what to look for in an accountant, you can throw that in the chat. Getting to Amy's question, if you're just starting out, when do you recommend hiring a bookkeeper? That is a good question. It kind of depends on the person and what they're doing. A lot of times too, there are folks that do their own bookkeeping right away, and then when they get to the point where they're not too busy, they hire, or when they're not when they're too busy, but when they have income coming in and they need their time for other things, then they hire us. Those folks, they usually do a decent job if they do their research. And one of the things that we do is we do tutoring services. So we can definitely work with them to help them better understand their bookkeeping and the bookkeeping processes. And we go over a lot of things that we talked about today. So it really kind of just depends on where you're at financially and what your schedule is like. Obviously, the sooner the better for getting a bookkeeper. And one thing too that you can always do is you can hire someone to help you set up your bookkeeping, and then have someone tutor you if that's the route you want to go. Obviously, I'm going to say that hire the professionals, because it's what we get paid to do and we know what we're doing. Is there a number of transactions or complications of accounts that is a good trigger? That's a good question. So usually, like, under a couple pages, if it's like 2 pages per account, it's usually going to be a lot easier. If you have a lot of accounts, like I think our biggest client has I don't think he has 12, but it feels like he has 12. So a lot of different accounts are going to be it make things more complicated for you. I think that might have answered Amy's question. If I didn't fully answer it, let me know. Moving on to, I'm really sorry if I say your name incorrectly, Tushar. Can I touch on topics specific to startups? Equity raises. Okay, this is a good question. We kind of covered that. I don't know if you were here for the whole for the whole presentation. We did talk about where the equity would go if you are if you have a VC and they're purchasing equity in your business. And as far as raising equity, again, you're going to want your profit and loss statement, your balance sheet. They're probably going to want to see it for a few years. Usually they look at the prior year and the current year. So that is kind of going back to Amy's question too. If you're planning on getting funding and capital, then you definitely want to make sure that you have that, you have your books up to date. So maybe start then. If you're like, I'm going to start looking for funding, then have your books. It's kind of a circular thing. You got to have the money coming in to pay the pay the bookkeeper. But in some cases, especially with looking for funding, you have to have the bookkeeping done to get the funding. Cash on your balance sheet, is that, I'm assuming, are you talking about like your assets or your like cash on hand? I guess maybe I would need a little bit more information before I talk to that. Lolly, if you're doing your books and it makes you want to cry. Yeah, I mean, and if it's making you cry, it might make your bookkeeper cry too. Just depends. Oh, cash on hand. That is a good question. I did kind of touch on that earlier. I don't know if you caught that when I was talking about. Oh, that's more cash flow, I think, than cash on hand. But we can talk about both things. I did talk earlier about cash on hand, and that was related to if you have incoming and outgoing cash, make sure you have record of it, or you could end up being like one of my clients whose books say, and this is not on me, this is definitely on him, that he has way more cash than he does, and that's because he has not handed me the receipts that I need in order to enter his outgoing cash transactions. So for that purpose, that you definitely need your cash receipts. Talking about cash flow, there's different things that you can do when you're, again, kind of going back to what Amy was saying, if you're worried about cash flow, that would be a good time to get started on your bookkeeping. You probably want to get started before then, but that's one thing that having solid bookkeeping in your pocket can do, is make sure that you're on top of your cash flow and you've got a good idea of what's going on. That also goes back to the AR aging and AR summary, or AP aging, I'm sorry. So we would look at your AR aging, and we would look at those accounts that are probably within the 60 to 90 days, hopefully way before then, but we would look at, okay, do you have folks that owe you money? Where's that coming from? How do we get that? If you're looking at, different organizations that can fund for you, that I do know of some organizations that have funding opportunities for startups. I don't necessarily know them off the top of my head, although I do know, Women Venture is always really good. I recently met with someone from Deed. They've got some really good programs, especially if you're in technology. They're looking for tech founders to send some of their funding out to. So that might be something to check into. I hope that answered your question. If you have more, definitely put them in the chat. Otherwise, anyone else who has questions, throw them at me. Hopefully I can answer. I'm glad that was helpful. It doesn't necessarily have to be about bookkeeping. Wally's questions are all related to things that she's had to deal with that give her headaches or make her want to cry. Why is it so important to retain loan and equipment financing documents, as well as the receipts you already mentioned, for your bookkeeper and CPA? One good reason is so that you can make sure that everything gets recorded on your books. So if you, we have another problem client. We love him dearly, but he makes life challenging and interesting for us. And one of the ways in which he does that is he purchases equipment and then doesn't, financing, and then doesn't give us the information we need in order to enter it correctly. And so that is a reason why it is important to have, documents from funding equipment or other things like that, so that it can get recorded and you have it on your books the way it should be. Molly, what would be your favorite software package for a small 3-person consulting startup? That is a good question. So okay, QuickBooks Online is the industry standard. I have serious issues with Intuit. I don't like their biggest business practices. I think that they are violating antitrust issues and they are creating a monopoly, and it kind of frightens me. So I try to get people not to go with them if possible. The other option, like I've mentioned before, I'm Xero certified. I like Xero. I am the only one in our firm right now that's Xero certified. And I do have an issue with the reconciliation process, and maybe I just haven't adapted to that yet, but that is something that I have an issue with. I know there's other software out there, but both of those options are fairly good options. Okay, Michael has a question about tax deductions. As a consulting engineer, he has a high-end laptop. Under what conditions is this deductible? So I would say it's probably, if you're using it solely for business, it's probably deductible either way. It just kind of depends on where you're going to put it. If you're going to put it as a fixed asset or as an expense. A fixed asset, you're going to have it kind of be deducted over time. Your accountant would depreciate it, and so that that amount would kind of go on your books over time. So like, let's say you purchased it now, and if it fits the parameters for a fixed asset, you could still be getting that depreciation in previous, not previous, upcoming years. So we would have like, it's 2021, you purchase it now, next year you would still get depreciation on it. That has to meet a certain threshold, and usually that threshold is determined by your CPA. So this is another good reason to have a good CPA, because you can contact your CPA and say, does this fit? Should I throw it in here, or should we throw it into expenses? Generally, I would say a lot of CPAs use the threshold of $1,000. So if it's over $1,000, you would probably be safe putting it in fixed assets. But again, check with your accountant first. Anna, that is a really good question. Pro bono services. I have seen issues with this. I don't know how this gets entered, if it gets entered. You would probably have it. I don't think you can really put that on the books. You would probably have to check with your accountant on that one. That's a really good question, though. I mean, Lolly and I kind of ran across that last year. We had a client that was trying to write off some of his services, and his accountant wasn't so excited about that. So yeah, like I said, I would check with an accountant on that. There might be some ways to do it, but I don't really know. Good. I'm glad that you're liking FreshBooks, Michael. Oh, donated services? Maybe.